Hey, Courtney Smith here. Let's dive right into what's going on here for March the 23rd. And of course, this is the most important thing. It's pretty much downhill from here on out. So what can I say? All right. First of all, S&P, clearly bear market. I felt that in the last week, I felt that we were going to probably get a little bit of a rally. We did not get the little rally. We got, if you look very closely, you'll see that every other day was an up day, but pretty much every day we made a lower high and a lower low. So still bearish price action, but not as bearish as it was, say, at the end of February or early March. We are showing some signs of stability. Also, look at the purple predictor. Purple predictor shows that people are buying this dip in the market. Now, all that was what caused me to think maybe we're going to rally. So I pretty much liquidated the whole portfolio looking for the market to pop. It didn't. And on Friday, as you can see, we collapsed. In some of the indexes, we actually made lower lows. So here we can see there's no buying pressure in the market. That's the little green line down there. And the little green line is saying no buying pressure at all. Once again, that's unsustainable. We've got to see some buying pressure come in here. Selling pressure is abating. It's coming down. And then the other thing to notice on this chart is the black line. That's the ADX itself. And I have a technique that I very rarely use anymore because, well, for a long reason. It doesn't matter why. But the point is that it'll give us the end of trend signal when it turns down. So right now, it's screaming up. It's up at 50 now. So if it turns down at all, we would liquidate all short positions. But I already liquidated all short positions. I'm actually going to reset my short positions today for fully paid up members. We're not going to be as aggressive right now because there are some signs that we might get a pop. The other thing is that the risk to the upside is now higher than it's been since this bear market began. And the simple reason is because there's going to be a day when we are going to see the government or the Fed or the European Central Bank or the People's Bank of China or all of the above come out and say, we're going to have helicopter money. We're going to fly helicopters. Big black helicopters are going to fly over your town and drop $100 bills into everybody's pocket. Now, to a certain extent, the U.S. government already said that when they said they were going to say, oh, we're going to send $1,000 to everybody. Oh, no, let's make it $1,500. Oh, wait a minute, I'll see you $1,500 and raise you to $2,000. That's helicopter money. So we're going to see that. The market didn't really think it was all that impressive, and it's not. If you understand economics, you understand that it's pretty much a waste of time. But lowering the payroll taxes, that's an important thing. Delaying taxes until July could be an important thing, although most Americans have tax refunds, so they've already lent the money to the government for free. So the point is, my point though is the risks are getting greater and greater that we're going to see a pop to the upside of 2,000 Dow points, not 1,000, 2,000, because of some government or Federal Reserve Bank, central bank policy statement. So we need to start to back off a little bit here. Now, if those statements come, it's not the end of the bear market. That's a shorting opportunity. Because this market I think we're still going to get to 1,600 on the S&P. We're at 2,300 now. It's another 700 points to go on the downside. So we've gone a long way. There's still more to go on the downside, but the next leg won't be as fast. This 30% dropped very fast. This is the fastest 30% drop in American history. The next 10%, the next 20% is going to be much slower, more choppy, more sloppy. Okay, once again, look at the purple predictor here. People are buying technology stocks. The smart money is buying these things. Well, I hate to fade the smart money. I'm going to do it a little bit here, but I'm not going to be super aggressive. So notice in the lower right-hand corner what happened. This is what's called a key reversal. It's a very bearish formation on a daily chart. So we made a higher high and a lower low on Friday. So that's called an outside day. And we closed lower on the day. When you have an outside day and a reversal bar, it's called a key reversal. It's considered the most powerful signal in all of daily chart analysis, particularly in the direction of the trend. And this is really why I'm going to get short. May only be short for a week or two, but I'm going to get short again, even after taking all those big profits that we took in the middle of the week, for all you fully paid up members, of course. All right, seasonality still neutral, expected to remain neutral. Now, the yield curve. Last week I said I'd want to see it get to at least 1. Well, we got to 1. But you know what? It's still not sharply positive. It's positive instead of lightly positive, but really positive would be 200. And we're at, let's call it 100 for all intents and purposes. So this is definitely a step in the right direction towards getting a bull market back. But I think we need to go up at least another 0.5% and maybe a full percent. A full percent would definitely be sharply positive. We don't have that yet, although it is moving in the right direction. So this is another reason to believe we might be getting closer to the end of the bear market than the beginning. Volatility index, I told you we get up here. We're not going to surmount these highs anymore at this point. We're just going to start to see the VIX come down, but it's going to stay above 40 for weeks. Okay, asset allocation. They bailed out of the stock market, went back into bonds. Risk, they plunged. The risk they just said, no risk. We're wimps. Call us wimps, but it's okay. We want to save ourselves. Although we did see a little bounce at the end of the week. Global shares, same thing as the U.S. All right, bonds rallied sharply here. You can see that. That's where they started buying the bonds again. This is one of the reasons why we saw the yield curve contract again late in the week, is because bond yields were going down. Remember, bonds go up, that means yields go down. Bonds goes down, that means yield goes up. Look at the smart money's buying here, though. That's the right way to play it. I've been bullish on bonds, but I haven't had a position for quite some time, for several weeks now, actually, because the price action has been poor. But what's happening is the smart money is going in and buying these bonds. 10-year treasuries yielding, 1%, and they're still going in and buying them. Guess what? That 1% is going to probably go to 0%. This recession's just getting going. The bear market, we've kind of gotten the bulk of the profits in the bear market, but the recession's just starting. And so as a result, bonds are going to go to probably 0% on the 10-year. Well, okay. Who cares? All right, the dollar. What's happening here is we have an incredible shortage of dollars. Why? Because everybody borrowed money and now they need to pay it back. So what's happening is around the world, in Europe, in Asia, in Africa, in Latin America, we're seeing a massive shortage of dollars. And what's happening is, remember that all these countries, which are now in lockdown, owe money in dollars, not in yen, not in British pounds, not in Zimbabwe dollars, but in US dollars. And they're all scrambling because guess what? They have no economy either. We're going to see many of these countries drop 10, 15, 20% in 1 month. The economy is going to contract dramatically. The global economy will be down probably 10% this quarter or over these several months. So all of a sudden, these third world countries, these emerging markets that desperately need the cash, they don't got no cash. They need to go get US dollars to pay back their interest and principal, and they're scrambling. They can't earn it. So they're just scrambling to get what they can. So this is why the Fed is putting out hundreds of billions of dollars in what are called dollar swap lines in order to get dollars into the hands of foreign central banks so they can get it into their local banking system. So look for the dollar to continue to rocket higher. Now, if the dollar's going up, that's usually bearish for gold, and sure enough, it's bearish for gold. I believe that what happens is what is going to happen is exactly what I've been telling you is happening, and I've been right on the money here. All the gold bugs, ignore them. Please, ignore the doom and gloomers. They don't know what they're talking about. They're Johnny One-Notes, and they've been Johnny One-Notes for year after year. It's boring listening to them. But they sell a lot of books and newsletters because, people like disaster news. So here's the reality of what's going to happen. I told you already that we're going to see a dip in the price of gold here early in this recession. And it's not going to see a bull market in gold until later, because right now everybody's just bailing out of everything they can, such as treasuries, but mainly things like gold, in order to support their margin calls in the stock market. Gold's very liquid. It's a small market, so only a little bit of selling can cause it to be crushed. But eventually what will happen is that margin call selling runs out, and people realize that massive easing is inflationary and down the road will be negative for the US dollar. And then, and only when those two concepts get into the market's mind, will we see the price of gold start to rally. Our indicators, working great. All three of them are bearish. So what do you think's happening to the price of gold? It's going down. This falls into the duh category. This is why even if you're a freebie, this is why you're watching this video. Because you need to know what's really happening, not the usual blah, blah, blah out there. Gold bugs. I was a gold bug. And I wish the U.S. government would go back to the gold standard. It would be fantastic. But let's deal with reality here, not the fantasy world that the gold bugs live in. All right, we got this incredible price war going on between Russia and Saudi Arabia. Both of them are trying to wipe out the American frackers, and with prices at $25 a barrel, it's going to work. You're going to start to see production. Well, you're already starting to see production in the United States dry up. It's going to continue to dry up. I told you last week we could get as low as $15. I said we get to 20 for sure. We got to 20 for sure. Now my next target is $15. The real question is, can we get to 10? There's a really good chance we're going to get to 10 because there's going to be no demand for oil and we have a price war going on. So unless the price war ends, you're going to see $10 or $12 a barrel oil. That's the end of the oil industry in the United States, temporarily, of course. It means massive debt defaults by oil companies. This is going to be a bloodbath. We've seen it, or at least I've seen these bloodbaths in the oil patch a number of times. I can remember 3. And you know what? You want to save up your pennies and go down and start buying oil leases in a year or 2 because they're going to be cheap, 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 and you become a billionaire. Okay, Bitcoin, safe haven? I guess not. So, therefore, we don't want to be involved in the Bitcoin market. It's fiat money, the same as the U.S. government produces, but Bitcoin doesn't have the advantage of that little thing on it that says this is legal tender. So I think in a time of crisis, people are going to sell Bitcoin like they're selling gold, and then later Bitcoin will come back, but not now. All right, freebies, you're getting the real story here. You're understanding what's going on for free. We love having you, but you know what? You really should be a subscriber. That's all I can say. All right, freebies, thanks very much. We'll talk to you later. Fully paid up members, hang on just a second. Hey, freebies, you've got to protect yourself. If you're not going to subscribe to Wall Street Winners, if you're not going to pay the $47 a month, which is a peanut, what's your life worth to you? What's your wealth worth to you? It's got to be worth $47 a month. But you've got to go to bit.ly/how-to-make-money-bear-market and sign up for our bear market class. You've got to go there. Please write that down, bit.ly/how-to-make-money-bear-market. How to make money bear market. bit.ly/how-to-make-money-bear-market. Go there right now. Sign up. You got to understand what's going on. I teach you everything. All right, freebies. Love having you. Talk to you later.